Hello and welcome to Virtual Investor Conferences. My name is Greg Young, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Alta Copper. Please note you can submit questions for the presenter in the box to the left of the slides. You can also view the company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Giulio Bonifacio, Chair and Chief Executive Officer of Alta Copper, which trades on the OTCQX Best Market under the symbol ATCUF and on the TSX under the symbol ATCU. Welcome, Giulio.
Thank you very much, Greg, and thanks for everyone who's attending today. Within the timeline that I'm allotted, we'll give you a good overview of the information. There's lots of information contained within the presentation material, but by all means, please reach out for one-on-one meetings if you'd like to do a deeper dive on the data. Alta Copper, a company that I initially stepped into as an investor years ago. Over the last number of years, initially as a director, chair, non-exec chair, chairman, and then recently, over the last couple of months, I've stepped in as chief executive officer. So I have a relatively large share position that will continue to grow. I like the project a lot. I like copper a lot. I think there's a fundamental supply deficit issue looming, but I also think that with the EV thematic, you'll see the demand increase. Now, whether you see an accelerated increased price in copper this year or next year, I think invariably it is going to happen. And so projects like this that are advanced, I think will do extremely well. I'll give you some background information that's, if you will, supports this. And when I initially looked at this project, I was fully aware of the fact that it had a large copper resource, last drilled in 2013 on a limited amount of drilling, 85,000 meters, but most of it's measured and indicated, so we could readily move into feasibility. I think the primary focus for me was if we had to replicate this body of work, what would that cost? And, by reference here in the presentation material, you see I've made reference to about 125 million US. It's likely higher than that. There's been a wealth of engineering studies, pre-feasibility studies, metallurgical test work. We recently put out an updated preliminary economic assessment building upon the previous engineering studies. It was very, very robust. And, when you look at $4 copper and the NPV after tax of 2.3 billion, that in itself is very significant. But, one of the key metrics is that you can look at is every 25-cent increase in the price of copper increases your net present value after tax by $25 million or $425 million, excuse me. I want to talk about the comps. I want to talk about the issues. If, when you look at this company and you realize that it's grossly undervalued, there's a reason for that. And so, turning the page and dealing with those concerns, I think we're readily doing here. Invariably, these things sometimes take you longer than you'd like, but the reality is that, the benefit is a project that's advanced, large, and it's got fantastic economics. Third-party validation. I always point to that because I think that's pretty important. You've got Fortescue, which is a $50 billion company that owns approximately 33% of the company. You've got analyst coverage. One notable analyst, Per Valancourt at Haywood, has put out coverage on this. Whittle Consulting, an engineering group that works on optimization, is also a shareholder. So, in my way of thinking, what better validation can you get than by way of real serious mining groups that have actually done a deep dive on the project? And in this case, all three of those groups have. In terms of turning the page, the economics really showed that there was scale and size in a project that could produce, close to 400 million pounds of copper for the first 10 years, scaling down over a 27-year mine life. And that's predicated on a drilling program that uncovered, close to 16 billion pounds copper gold equivalent, last drilled in 2013. So there's also a further opportunity to demonstrate that this is a project that could be arguably generational. We need to get back in and start drilling. We're intending to do that in 2025. We have had to update our drill permit application. We got approval from the Ministry of Energy and Mines back in October. The key point, one of the criticisms or concerns in the company is, will they get their community agreement to allow us to move forward? I'm very confident that will be taking place here in 2025. Once that's in place, we'll start in on a drilling program. But when you look at the valuation today, you look at the opportunity, clearly the markets have had some volatility here. So you might be seeing some tax loss selling of sorts. We traded as high as 80 cents this year. We're currently trading at 45 to 50 cents. that valuation in itself creates a fantastic entry point without a doubt. And so, the next step for us is advance to exploration, drill it further. We can start in on feasibility. That'll start the clock on permitting. I don't think that's going to be necessary. I think our primary focus is going to be, the drilling program and what that uncovers. But when you look at the economics to date, and we'll point to those shortly, you'll see that they're very, very robust. You look at our share structure, very modest. Every financing we've done has been done at a premium to market. There's no warrant overhang. You have a strong shareholder base. Clearly, it is about executing. And as I mentioned earlier, I stepped in as CEO about 3 months ago. So making some immediate changes. The founder of the company, who was a founder and involved with the company for the past 25 years, did a wonderful job with respects to the resource, advancing it, previous engineering studies. My approach is more, how do we get this done in the shortest timeline possible? And how do we affect transactions that create value? And so once that occurs, the valuations will change, and they'll change that, in a very dramatic leverage fashion. Now, when you look at our preliminary economic assessment, it was put together by Ausenco, who are a very notable group. They did the construction management on Constantia for Hud Bay. They've also done the work at Frutec on Safranal. Well-versed in South America, very much understand costing from a CapEx perspective and OpEx perspective. What I wanted was a study that was readily defendable. Can we actually build a project that produces this amount of copper on a per annum basis, operates at 120,000 tonnes a day? But you can see at $4 copper, and this is after tax, $2.3 billion, and a very good internal rate of return for a project of size. Now, we do think there's an opportunity from an after-tax perspective, because if you simply look at the pre-tax number and you look at the difference between the pre-tax number and post-tax number, you'll see that there is a bit of a difference. There's an opportunity there, but clearly the commodity price and the leverage, and as noted, every 25-cent increase in the price of copper increases our after-tax NPV by $425 million. But if you look at the bottom box, you can see the magnitude and size. These are projects, and this is a project of size that's going to be of good interest to various serious companies and large cap mining entities. And we've already got one participating, very supportive shareholder. They're clearly there for a reason. I would pay close attention to their involvement. That should demonstrate that there's going to be an ability for this project to move forward. But you need to do so with companies that have the mining team, the execution abilities, also companies that have a balance sheet. And in this case, Fortescue does. But clearly we're talking to other groups as well. We'll continue to do so. Slide 7, detail that you can look at on your own. And this presentation material is on our website. So please visit our website if you want a deeper look at the project and the people that are involved. This slide for me is probably the most compelling slide of all. It speaks to our market cap, which is a very modest 45 million, as high as 65, 70 million, but that's still modest in comparison. And if you look at the numbers and you look at this stage of development, there's a previous pre-feasibility study done on the project. This is a updated preliminary economic assessment, 43101 compliant, builds on the previous engineering studies. But you can see that when we look at our capital numbers, they're well defined. They're very conservative. It's 2.1 billion, but projects of size that can produce close to 400 million pounds of copper per year for the first 10 years with an operating cost such as this. And you just have to do a side by side. And I'm not saying that they're exactly comparable, but they are to a certain extent. And so my key point here is that there is an opportunity to see a leveraged increase in our share price and our valuation post us getting a community agreement in place. And I'm extremely confident we'll do that. I stepped in as CEO recently. Shortly thereafter, got the drill permit approved by way of the Ministry of Energy and Mines. And so that should be an indication that things are progressing nicely. I was involved with 2 previous copper companies. Both have done extremely well for me and other investors. Faraday Copper, who's also on this slide, I was a former chairman of it. I acquired the Copper Creek asset, was able to bring in a pretty notable group, and they've done a very, very good job with that. This project's located in Arizona, American Southwest, so slightly different. But when you compare the economics, you compare the stage of development, you compare the resource, and the mere fact that over 80% of our resources measured and indicated, I think, speaks volumes. And so continue on. And then you look at it from a PNAV perspective, you compare it to our comps previously listed, you can see that we're trading at a paltry discount. I'm very, very comfortable that you'll see that increase over a period of time. Now, when you look at a company that was care and maintenance until about 2023 and realize that hit the reset does take time. And one of the key focuses for me has been, hey, let's update the economic study, put forth something that is really reflective of what this project looks like, also demonstrating in this instance a 27-year mine life, but also speak to the importance of a drilling program. And again, last drilled in 2013. So starting on that process, making the application for the drill permit took us a good 12 months, recently approved. Now we have to move, because of that approval, to engage with the community and put something in place that allows us to work with them. I'm very comfortable with all the different initiatives, the changes in our personnel that will get there. And so there are certain groups that point to that as a negative. I think you'll see that overcome. I have also, based on my background in the first company that I founded in 2005, that I retired from in 2018, permitted the largest copper project in the American Southwest. So I do understand process. I understand stakeholders. I think in this instance, it's Peru. Peru has actually changed a whole lot for the positive in the last number of months. They are very much pro mining. Copper is the second largest copper producer in the world as a country. So I think that you'll find projects like this in northern Peru will advance accordingly, and any criticisms or concerns will be dealt with in short order. When I looked at it, it was firstly put forth the economic study that was reflective of what the project represents. Secondly, get a drill permit that we could use to then move forward with the community. If I can hit all three of those initiatives in the short term, and I've already hit two of them, I'm very, very confident that you see the valuation change. I also think that by way of the drill bit, it's a fantastic way to add value. So looking at the economics, and you look at NPV versus initial CapEx, as a finance guy that's been in mining for 30 plus years in every stage of development, from exploration, development, construction, I would look at the next slide more critically. Based on your total CapEx, what is your NPV? Because that gives you a better sense of returns and cash flow after all-in costs and all-in sustaining costs. That factors in your initial capital, your sustaining capital, and demonstrates the robust nature of a project. In this case, the payback is very short, and it's because it's got size and magnitude. But I'm very clear in this one comment. Companies like Alta Copper and the other ones listed in the previous slide should not be building their projects. You typically want to be engaged with a senior that's got the balance sheet, that's got the construction team, execution team to build these projects out successfully. Every time you see a junior move forward on a project, they typically have some challenges because operationally or from a CapEx perspective, they don't have enough in the balance sheet to support the overruns that potentially do take place on occasion. Capital intensity. So, when you look at projects, we're at the right end of the curve on every single one of these slides. So in the interest of time, I'm going to go through these a little bit more quickly. But as you can see, on a comp basis, we match it very nicely. The biggest disconnect of all is basically our market valuation. And again, that gets back to a legacy concern on community. That will be overcome. We've changed our approach. I've changed the approach. We're moving forward in a very positive fashion. And I think you'll see us put that forth. Of course, you're always going to get some opposition. That is implicit with whatever jurisdiction you're involved with. Even if you're in the American Southwest, even if you're in British Columbia, certain parts of Quebec, certain other countries, there's always going to be some opposition. I will never need on this project 100% support, but if I can get majority support, and I'm very comfortable in saying we'll get that, you'll see us move forward, and you'll see us move forward with the drill bit, which I'm very excited about, and kind of want to move to that a little bit. But before I do that, on slide 14, you can see that we're already sitting at a 27-year mine life. Now, just think about that. Last drilled in 2013, porphyry system. Usually when there's one porphyry deposit, there's a cluster. There's just a great opportunity. So I want to turn to these next number of slides. We could talk about infrastructure. We're very well located. We've got a highway to the north. We've got low power costs. We've got a full port facility. We're not in a remote location per se, because we can access the highway to the north and ship out the copper concentrate. We are not ever going to relocate the community. Peru, I've been in the business for a long, long time. Peru was one of the better places to be a number of years back, and that is now coming back to the middle because they understand that this is a big part of their economy and their GDP. So more multi-billion-dollar projects in Peru than you typically see in most countries. Now, when you look at the resource, and you appreciate that they did a very systematic program in 2010 to 2013, they didn't really have all the data in a 3D model. They didn't put it in the leapfrog. They didn't turn it around. They didn't bring in the lithology, the structure, the alterations. But when you do that and you look at the resource itself, as I did note earlier, most of it's already in measured and indicated. Caniarco Sur has only had 15 drill holes, and it's already sitting on a significant endowment. So do we think there's more of an opportunity there? Yes, by all means. Our DIA/drill permit encompasses approximately 43,000 meters of drilling. We're looking at doing it on a success basis, 10,000 meters at a time. We will start that in 2025. You look at the breakdown on the project, you look at the geological signatures, very comparable. Sur has had limited drilling. Caniarco Norte has had most of the drilling. That's where most of the resource sits, most of it M&I. A very low strip ratio, which is clearly demonstrated within our economic study and previous pre-feasibility studies. Verity has had no drilling, but it's got all the same signatures. And so when we move forward and look at this satellite image, this is more included to show you the orientation of the deposits from north to south, 4 kilometers top to bottom, same similar signatures geologically. And there's just several high priority drill targets that we'll be able to drill out in the coming year and subsequent thereafter. Now, when I look at this image, the other thing that should be gleaned from this is the fact that we're not going to relocate the communities. We're simply going to look at putting in place a road 15 to 20 kilometers to the highway to the north, and that'll allow us to gain access. We're not going to relocate the community. We're not going to drive haul trucks through the community. So that, that from a community social perspective is very critical. You look at what we had to put forth for purposes of the drill permit application. Most of the drilling in Norte, Sur's had limited drilling. All the blue vertical lines represent the proposed drill targets. So we have many. I'm going to show you 1 or 2 sections just to give you a sense of what this potentially looks like. This is one cross section, and what they did is they never drilled below a certain depth, and when they hit that depth, they stopped drilling. So 32 of 45 drill holes bottom in mineralization. And so this slide, the warm red magenta colors represents grade. We've got many targets to chase, both laterally and at depth in Norte. If you look at the drill intercepts at the top of this slide, you'll see that in all 3 instances, those 3 holes bottom in mineralization. So clearly there's an opportunity there. As I noted, where there's one porphyry, there's usually good extent both laterally and at depth, but there's also an opportunity for us to add more from a tonnage perspective and grade perspective on the secondary deposit, Sur, and the third potential deposit being Verde. They look very promising. So when we look at this next slide, if I could, another section that simply highlights the same activity in that, hey, look at all the different targets. And again, if you factor in that, 32 or 45 drill holes bottom in mineralization, and you appreciate that there's higher grade components within each and every deposit, there's going to be a great opportunity. You look at the success of other companies and the valuation, many of the valuation increases have been the result of the drill program. Now, I have been pushing for that drill program for the last 18 months. I will continue to do so. We've achieved a major milestone in achieving the approval from MINM, Ministry of Energy and Mines. Next step is work with the community. But bear in mind, the community benefits from our activity. In the last drilling program back in 12 and 13, we employed over 250 community members. The same will occur in this next drill program. And again, I need majority support. They have not seen much or real activity at the project for a number of years. So they're very supportive because they appreciate that this will benefit what they do and how they grow their respective businesses. We're also assisting them with sustainable development and other business initiatives, more as a responsible community stakeholder. We've got a reconstituted board. One of the gentlemen on my board has been very helpful to me. He's done this before. And so with his guidance, with changes on the community team, changes in terms of our approach, again, I'm very comfortable in saying we will gain that third major hurdle. And once we start drilling, you'll see the valuations change. The numbers in themselves are supportive. There's many ongoing discussions. Those will continue. Also bear in mind that my previous 2 copper investments where I was chair of and CEO did extremely well for many investors. I fundamentally believe this is a better project and will do far much more. And, the benefit of having a large supportive shareholder in Fortescue is, I think, a key development people should pay attention to. They're not there for any other reason than to potentially look at possibly acquiring the company. They only have one rate. and that's a preemptive right. So any equity issue we do, they'll get to maintain their shareholder interest. I think that's a positive. They, in times past, had a right of first refusal on joint ventures, streaming, divestitures. They no longer have that. Within Alta Copper, we also have 3 other projects that are earlier stage exploration. You'll see me execute some joint venture type relationships with those projects. Our primary focus is Caniarco, but there's value add on each of those other projects that have yet to be demonstrated and shown in our market valuation. You look at Peru. Now, again, if I was asked the question 2 years ago, I think it was pretty clear that Peru was going through a lot of changes and a lot of issues relative to projects. And it's been very clear to Biorte, who stepped in. Castillo was ousted by way of an act of Congress due to corruption. Biorte stepped in and made it very clear that she understood how important mining was in Peru. They like copper. Again, second largest copper producer on the planet. Congo, I think, is close within that rating, but nonetheless, projects like this in northern Peru are very important. We've had the support of the Ministry of Energy and Mines. Mines minister has recently changed, but the new incoming mines minister, I think, is also going to be very supportive. He's a mining individual. He understands the importance of these projects. So needing the drill permit approved first and foremost and using that as a basis to get towards a community agreement, I think that's all part of what we'll be doing here in the coming months, and you'll definitely see some further news to that effect. And that, from my perspective, will drive value. When you look at the people, you can look at their backgrounds. Recently hired a principal geologist, PhD. The purpose of that is really to look at the work that we've done to date. The founder of the company was a geologist, but I do want to vet it, review it, and I really want to focus in on the high priority drill targets for expansion purposes. And I think any bit of success by the drill bit will drive the valuation to a completely different spectrum. And when you look at that earlier slide, and I don't want to go back because there's a bit of a time lag going back on slides, but if you go back to that slide, you'll see that in many instances, all those companies have similar type economics. However, the valuations are arguably half-baked or fully baked. In our case, not at all. We've traded at a huge discount for a reason. And again, the key initiatives being demonstrating the scope and size of the project, demonstrating that we could get the drill permit, dealing with the community, making the changes that were needed. We're all a big part of the strategy. So it has taken me longer than I would have liked. However, extremely confident that we'll get there. When you look at the board members, Robert McDonald, with his background, has been very helpful to me in terms of dealing with the ministry and also community type issues. My other directors, Christine Nicola and Andrew Hamilton, very helpful. Christine Nicola and Andrew Hamilton, both at Fortescue. Andrew Hamilton is a mine builder, been involved with Fortescue for a number of years. Clearly, he's there for a reason. I'll let you determine what that is, but it should be pretty apparent. Steve Latimer is also an independent director and has been with us for a few years, and also chairs our audit committee and our compensation committee. So extremely helpful to what we're endeavoring to do here as a group. You look at the appendix, look at those notes on your own. But let's look at capital for a moment. It's 2.2 billion or thereabouts with sustaining. These numbers factor in a 20% contingency, are well put together. They're not what you would typically see with a junior company. Again, it's Ausenco that put this together for us as the lead engineering group. Whittle Consulting was involved as well. They worked on optimization for us. But the mere fact that we have soft rock, we can process 120,000 tons a day. And because of the fact that we have that soft rock, we can go with one SAG mill, 2 ball mills. That all allows us to create magnitude and size on this. And typically, for projects of that size and magnitude, you typically need 2 SAG mills and 4 ball mills. Well, that adds substantially to your CapEx. So when you look at the power supply, power cost, you look at access, all those help us in a very significant way. You look at our all-in cost. Now, again, that's how projects should be looked at. Everyone looks at NPV, IRR, but what is the cash flow? What is the multiple? What's the payback? And, already at $4 copper, 2.4 billion after tax opportunity in terms of mitigating the tax exposure. But every increase in the price of copper, every 25 cent increase in the price of copper increases the NPV after tax by 425 million. So, do spend time, look through the presentation. Please also feel free to reach out. And if you're so inclined, we can organize one-on-one meetings. I've got about 5 minutes left. I don't know how many questions are in the queue, but we'll definitely try and answer some of them. There was a question on our current cash balance. Well, the last financing that we did was done at 54 cents. It was done at a premium to market, no warrant. It was put in place to carry us till next year prior to the drill program. As soon as we get approval on the drill program, you'll see us activate a more market awareness program. Well, that'll be ongoing. I'm very hard pressed to raise money at this level. And I really don't think I need to. I think there's many opportunities from streaming, selling a royalty. There's only a 0.5% royalty in the project. So very, very limited in terms of burdens on the project. So we're more than well financed. You won't see us need to do that over the near term, likely Q2 at some point. But by then, I think you see a completely different valuation. Clearly, with the volatility in the market this year, you have some uneasy shareholders. People look at the press clippings, copper, what copper represents, projects of this size, magnitude, how we match up on a comp basis. That's what's going to drive valuation. The mere fact that we have a serious buyer in the wings potentially should be looked at in a very serious way. Why did this is, I think, a very good question. Why did the prior management group stop drilling? Their view back in 2013 was, and if you look at cycles, and again, I started Nevada Copper in 2005, stepped away from it in 2018, retired. So I went through that entire complete cycle. Come 2013, 14, 15, the market started to change. Copper prices just started to come off. They had a view that they had more than enough in the resource, and they did. Again, if you look at Cañarico Norte and the fact that you're already sitting on 13 billion pounds or thereabouts, they had more than enough to go to feasibility. Their view was, hey, let's move it to pre-feasibility study and see if we can get acquired. By the time that was completed, they ran out of money and they couldn't complete the work in its entirety. And the market had gone away in simple terms. And from about 2015 till I stepped in 2021, 22, and I stepped in initially as an investor, and I knew the founder for a number of years. I really fundamentally felt that this would change, and doing the work that we're doing now, I think is going to be what adds value without a doubt. And so there was a good reason for it. It says, and the next question, if I could read it out, drilling program is about to begin. Is the majority of the affected communities in favor of the project? The answer is yes. Now, do we have to work with the community? Do we have to change our approach? Do we have to be responsible community stakeholders? By all means, we do. And we're not just helping them on their other business initiatives. We're demonstrating to them that, the drilling that we're proposing, they'll benefit from by way of direct jobs. We'll pay them a fee, but by comparison, any fee that we pay to a community member is modest by comparison to what you'd have to typically pay in any part of the world, in North America and certain other parts of South America. So it is really about working with them, changing the approach, communicating. There is some opposition to it. Some people read those press clippings, and to my amusement, they use that as a selling opportunity. That makes no sense at all. There's one individual that continually suggests we won't get the community agreement. Well, he's the same guy that suggested I wouldn't get Nevada Copper Pumping Hollow project permitted. I did. At the end of the day, when it was brought into production, I had already stepped away from it. We started the construction process. The group that stepped in went plus 50%. That was an opportune time for me to retire and step away. Again, did extremely well by that opportunity, did extremely well by the Copper Creek acquisition and the Faraday group that stepped in. They've done a fantastic job. One of the best in space, in industry relative to advancing projects. However, this project, simply looking at the numbers, looking at where we sit and appreciating that, it's not early stage exploration. It's not a project that's 20 years away. And so, I would suggest that investors should pay attention to how long will it actually take to take a project to the next stage. And in this instance, and if you look at our previous timeline, you can see that, we think if we start in on feasibility and start the process with analysis, that we could be construction ready before 2028, 2029. Now, again, I can't guarantee those timelines, but that's a pretty systematic approach to where we're at. My primary objective, though, is to demonstrate that this could be a generational resource. And all you have to do is look at the data and appreciate that technology has changed from 2010 to where we're at today. We've turned it around. We've looked at it. I've been around this business for a long, long time. There's just so many high priority drill targets. And, simply put, 32 to 45 drill holes bottom in mineralization, you typically extend, and there's usually depth extension to these porphyry systems. And on top of that, we have a secondary deposit called SUR that on the back of 15 drill holes. We didn't even put out a resource on it until I suggested we do so. And we did that in 2022, and it already sets on 2.5 billion pounds of copper. And let's not forget about the gold. You've already got close to 3.5 million ounces of gold. You've got silver as well. So, there's always going to be that byproduct streaming value that comes with this. With that said, I'm at my 30-minute mark. I want to thank everyone for participating, and please feel free to reach out to organize one-on-one meetings or simply contact me directly if you've got my contact details. Thank you very much.